This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, May 18th, 2015. So the euro continues to trade higher, and the market is expected to be very well supported on dips as it inches closer to a measured move objective off a double bottom trigger that coincides with a February peak around 115.35. At this point, a break back below the recent low that we saw from Friday at 13.24 would be required to take the immediate pressure off the top side, though really only a break back below the previous neckline in the 1050 area would compromise the current outlook and put the pressure back on the downside. Sterling dollar. So cable continues to be very well supported on dips, with the market now inching closer towards its measured move objective in the 159 area. At this point, any setback should be very well supported, with only a break back below some previous resistance that we saw around the 155 area would compromise the current bullish outlook on a short-term basis. Over the medium term, the downtrend still remains intact, and any rally should be very well capped up towards the 159-160 area. Dollar yen. So dollar yen has been locked within a very tight consolidation over the past several weeks and months, and the market is looking for a break of this range. If you look at moving averages, the 10, 20, 50, and 100-day moving averages are all coiling within 100 points, and this does warn of a major breakout in the sessions ahead. At this point, a break above 2050 would be required to maybe turn some heads, while back below 118.20 would do the same to the downside. Euro Swiss. So Euro Swiss looks like it wants to be carving a higher low by recent lows that we saw around 103, with the market to confirm this on a break back above 105.25, which would expose fresh upside towards that recovery high that we saw back in February at 108.15. Really, at this point, only back below that recent low at 103 would take the pressure off the top side. Aussie dollar. So although we've seen a little bit of a pullback in Aussie in recent sessions, the market is expected to be well supported by that previous neckline resistance that comes in around 79.38. Ultimately, though, only a break back below recent lows that we saw that come in around 78.63 would compromise the current recovery outlook and put the pressure back on the downside. Look for a break back above the recent high that we saw last week at 81.63 to open the door for a measured move objective towards 83 off that double bottom further up. Dollar CAD. So dollar CAD has been trading higher a little bit in recent price action, though the market is still locked within a short-term downtrend since breaking below key support at 123.50 several days back. At this point, there's room for additional weakness in this market down towards a measured move objective at 1865, though any additional setbacks beyond this level should be very well supported in favor of a more medium-term bullish resumption. Kiwi dollar. So ultimately, Kiwi remains locked within a well-defined downtrend, and the market is now looking to put in a medium-term lower top at 77.44 ahead of the next major downside extension below those lows that we saw from this year back on the 3rd of February at 71.76. A break below 71.76 would open the door for a move down towards 65. At this point, only back above 77.44 would compromise the bearish outlook. SPX 500. So the S&P 500 continues to be very well supported and trades just off another fresh record high around 21.26. But the market has been unable to really establish any momentum above 21.26, and until it does leave open the possibility for another topside failure in favor of fresh downside back towards 2040. However, a break below 2040 would really be required to take the pressure off the top side and open the door for a significant correction to the downside. Until then, the pressure does remain on the top side, and there still is risk for additional record highs in this market. Gold. So gold has seen a pretty significant break in recent sessions, with the market taking out key resistance at 12.25. However, the market will need to close above 12.25 to convince of a recovery and open the door for a more significant upside towards 1300 in the days ahead. If we do see a close above 12.25, this would do a good job of solidifying the prospect for a major base in this market since bottoming out at 2014 at 1131. Really, only back below 1170 would compromise the basing outlook for this market.